Hello, and welcome back to the channel. I'm Algabot, and this is where we take apart automated trading strategies for MetaTrader 5 and study how they actually think. Today we're looking at an expert advisor called Directional Energy Asymmetry. It's an original system built entirely from raw price and volume, with no traditional indicators layered on top. Instead, it treats every candle as a burst of market energy and measures which side, buyers or sellers, is putting more conviction behind their moves. By the end of this video, you'll understand exactly how it reads that energy and how it manages each position. Let's dive in. So what exactly is directional energy asymmetry, and what makes it different? At its heart, this expert advisor is a single time frame, conviction-based directional system. It doesn't rely on moving averages, oscillators, or classic chart patterns. Instead, it builds its own custom measurement directly from the four prices and the volume of each candle. The core idea borrows a concept from physics. Every completed bar is treated as a small physical impulse. Its mass is the tick volume, which reflects how much activity took place, and its velocity is the distance from the open to the close, carried with a positive or negative sign depending on whether the bar finished higher or lower. Multiplying the mass by the square of that velocity gives each bar an energy value that is always positive, while the sign of the move tells us which side it belongs to. Over a rolling window of the most recent bars, the strategy pools all that energy into two reservoirs, one for up-closing bars and one for down-closing bars, and then measures the imbalance between them. That imbalance is the asymmetry reading. Importantly, this is not the same as net price movement. A market can grind slowly higher on many small, quiet up bars while a handful of heavy, forceful down bars quietly dominate the energy pool. The strategy is designed to notice that hidden pressure. Because raw energy readings aren't comparable across different symbols or market conditions, the EA standardizes the value against its own recent history, expressing it in adaptive standard deviation units. This means it retunes itself automatically as volatility expands or contracts. It's best suited for traders who are curious about volume-aware, self-adapting systems and who want to study an approach that thinks about force rather than direction alone. As always, this is educational analysis, not financial advice. Let's walk through the mechanics step by step. The strategy works on closed bars only, acting once each time a new candle completes on the primary time frame. When a bar closes, the EA records its open, high, low, close, and tick volume. First, it calculates the energy of each bar in the pooling window, which defaults to the last 20 bars. For every bar, it takes the tick volume as the mass, the close minus the open as the sign velocity, and multiplies the mass by the square of that velocity. Because the velocity is squared, larger candles contribute disproportionately more energy than small ones, so a few heavy bars can outweigh many gentle ones. Bars that closed up add their energy to the up reservoir, and bars that closed down add theirs to the down reservoir. Next, it measures the asymmetry. It subtracts the down energy from the up energy and divides by the total, producing a single number between -1 and +1. A reading near +1 means the upside is carrying almost all of the conviction. A reading near -1 means the downside dominates. And a reading near 0 means the two are balanced. Then comes the self-adapting step. The EA keeps a running series of these asymmetry values and calculates a z-score over the adaptive lookback, which defaults to 120 values. This converts the raw reading into standard deviation units, telling the strategy how unusual the current energy skew is relative to its own recent normal. Now the rules. The strategy signals along when the standardized reading rises to or above the entry threshold, which defaults to 1.2 sigma. It signals a short when the reading falls to or below the negative of that threshold. In other words, it enters in the direction of a significant, persistent energy surplus. For managing an open position, the EA exits when the reading returns inside the exit band, which defaults to 0.3 sigma. That's the point at which the reservoirs have rebalanced and the edge is considered spent. It will also close a position if an opposite, entry-grade signal appears. Risk is handled dynamically using the average true range. The stop distance is the ATR multiplied by 2, and the take profit is that stop distance multiplied by the reward ratio of 1.6. Only one position is held per magic number at a time, and once a trade is open, the stop and target are left to run. Let's look at the actual MetaQuotes language code you'd see if you opened this expert advisor in MetaEditor. At the top are the input parameters, and these mirror the defaults exactly. EnergyWindow is set to 20 bars, the adapt lookback to 120, and the entry threshold to 1.2 sigma with an exit band of 0.3. The ATR period is 14, the ATR multiplier is 2, and the reward ratio is 1.6. Lots and the magic number round out the list. Because they're inputs, you can adjust any of them from the EA's settings window without touching the code. Below that is the long side. The condition reads, if the standardized signal, S, is greater than or equal to the entry threshold, the strategy prepares a buy. It reads the current ask price as the entry, then sets the stop-loss one-stop distance below that entry and the take-profit one-stop distance times the reward ratio above it. It then calls trade.buy with the fixed lot size and those stop and target levels attached. The short side is the mirror image. If S is less than or equal to the negative entry threshold, the strategy prepares a sell. It reads the current bid as the entry, places the stop-loss one-stop distance above the entry, and sets the take-profit one-stop distance times the reward ratio below it, before calling trade.sell. Notice how both sides share the same volatility-scaled stop and reward logic, and only the direction flips. That symmetry is what lets the strategy respond to energy skew on either side of the market. Now let's bring it all together on the chart. Below the candles you can see the strategy's own energy asymmetry reading plotted as an oscillator, moving in standard deviation units. The dashed lines mark the long entry level at plus 1.2 sigma, the short entry level at minus 1.2 sigma, and the narrow exit band around 0. Watch how the reading, not the price alone, drives every decision. On the left, the market is quiet. The first few candles are small and indecisive, some closing slightly up, some slightly down, and the energy reading hovers close to 0 inside the exit band. Neither reservoir has the upper hand, so the strategy simply waits. There's no meaningful skew to act on yet. Then the character of the market changes. A larger up candle prints with heavier volume, and because the energy calculation squares the size of each move, that single forceful bar pushes a lot of energy into the up reservoir. The next candle continues higher, again on strong participation. You can see the oscillator climbing quickly now, lifting off the 0 region and heading toward the upper threshold. On the sixth candle, the reading pushes above the long entry level at plus 1.2 sigma. This is the strategy detecting a persistent energy surplus on the buy side, conviction that is built up and, by its hypothesis, hasn't fully expressed itself in price yet. That's where the buy entry marker appears. At that moment, the EA measures the average true range and places a stop below the entry at 2 times the ATR, with a take profit set at 1.6 times that stop distance above the entry. From there, price follows the energy. The next candles extend higher in a clean, steady advance, each one closing near its high. The up reservoir keeps its lead, the oscillator stays elevated well above the threshold, and price climbs toward the take profit target. On the ninth candle, price reaches that target and the long position closes for a completed move. Now watch the shift. Right after that peak, a large down candle prints with heavy volume. The velocity is now negative and, once again, squaring it pours energy into the opposite reservoir. The oscillator drops sharply, falling back through the 0 region and the exit band, and keeps going. On the 11th candle, the reading crosses below the short entry level at minus 1.2 sigma. The downside is now carrying the conviction, and the strategy signals a short. That's where the sell entry marker appears. This time the EA reads the bid price, places the stop above the entry at 2 times the ATR, and sets the take profit that same reward multiple below the entry. Price then works its way down, candle after candle, each one closing near its low as the down reservoir stays dominant. The oscillator remains pressed below the short threshold, confirming that the energy skew is holding. On the final candle shown, price reaches the lower take profit target and the short position closes. Notice the pattern across both trades. The strategy never tries to guess a top or a bottom, and it isn't looking for something to be overbought or oversold. Instead, It waits for a genuine, measurable imbalance in volume-weighted energy, then enters in the direction of that imbalance and lets the ATR-based stop and target manage the rest. When the reading eventually settles back inside the exit band, meaning the two reservoirs have rebalanced, any remaining position would be closed because the edge it was riding is considered spent. This is how directional energy asymmetry turns raw price and volume into a single, self-adapting decision, one closed bar at a time. Remember, this is a simplified illustration for learning purposes only. And that brings us to the end of our breakdown of directional energy asymmetry. Today we explored how this expert advisor treats each candle as a burst of market energy, pulls that energy into up and down reservoirs, measures the imbalance, and standardizes it against its own recent history so it can adapt to changing conditions. We looked at its entry and exit rules, its ATR-based stop and target, and we walked through both a long and a short example on the chart. Everything here is for educational purposes only and is not financial advice, a recommendation, or a solicitation to trade. Trading carries risk, and losses do happen. If you found this analysis helpful, please like the video, leave a comment with the strategy you'd like us to study next, and subscribe for more MT5 strategy breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.